Hello, everyone. Welcome to the Robin Report and Placer AI webinar. I'm Shelley Coham. I'm the executive producer from the Robin Report. And today we have a fantastic guest joining us. We have Elizabeth LaFontaine, who is the retail strategist and director of research for Placer AI. So, welcome, Elizabeth.
Thank you so much for having me. Excited to be here today.
Well, one of the things I love about your background is that it's chock full of retail and analytics, and also across a variety of industries. So it's kind of like the crossroads between retail and tech. So you worked at Saks and Macy's and Steinmart, NPD, and now Placer AI. So I really feel like you truly understand the art and science of retail. So I'm excited to have you here today. We're going to be talking about Q3 and Holiday Outlook 2024. It seems like yesterday that we just did the halfway yearly report, and now we're already talking about holiday. So before we jump in, though, I do just want to remind our audience that we are taking questions. So we want to hear from you. Please use the Q&A function to ask questions, and we'll address those at the end of the webinar. So I'd love to turn it over to you, Elizabeth.
So, just to kind of give you a brief overview of what we're going to be talking about today, first, we're going to do a Q3 check in of the latest stories of what's been going on in the retail industry. As Shelley alluded to, it feels like we were just talking back in June about kind of the midway point, and we have a whole nother quarter and a lot of stories that have emerged across retail that we're going to be digging into. And then we're going to be talking about what's trending across retail. We have seen things from a variety of store formats to different types of consumer segments to kind of different industries moving around from our high flyers to some rebounding industries. And then finally, we're going to get into what to expect. So, kind of looking back at what's kind of the key takeaways from the fall season, as well as back to school, as well as what we can think about as we're looking for the holiday 2024 season, because we are already in the midst of it, as well as what we're thinking about for 2025. So, just to give you kind of a brief introduction of myself and who Placer AI is and what we do. So, I am on our analytical research team, and we are a small but mighty organization who serve a few different purposes within the organization. We serve as sort of subject matter experts in the various verticals that we work in. So, I have worked in the retail industry for a long time. We also serve as sort of consultative partners to the clients that we work with, working on individualized analytics projects or answering kind of high level business questions that our clients might have. We also work on a weekly executive briefing called The Anchor, which I highly recommend checking out if you have the time. There is such a wealth of insights, and we publish on Friday, so it is a amazing read for during your weekend. So to kind of get into what Placer AI is, so we at our core are a foot traffic analytics company, and we're powered by mobile data. We provide insights on traffic movement around physical places in the US, including things like shopping centers, retail locations, restaurants, entertainment venues, municipalities, kind of anything that you're thinking about that you can draw a physical box around. We are able to measure traffic against that. And we leverage a panel of tens of millions of devices, and we utilize machine learning to make estimations using our panel for visits to locations across the country. And our company and our products are built with a privacy by design approach. So, what we are able to kind of tell you using this data, there's such a wealth of information that you can get from foot traffic analytics, especially kind of understanding movement patterns across the US. But from a retail lens, we are able to help retailers with site selection opportunities and figuring out what types of new markets they might want to enter. We can look at potential trade area cannibalization or where your customers are coming from, the trade areas that you're pulling to your retail locations. We can also look at visitor journeys, so where devices are going before and after they visit a retail location by category and sometimes even by location itself. We work with a bunch of other third party data providers where we're able to layer on additional levels of insights, for example, demographic information like from the Census Bureau or Persona Live, which is a partner that we have to really kind of tell the story from a demographic and psychographic perspective as well. So, getting into today's content, I think if we had to kind of summarize where we are in 2024, I would say that things generally, despite many of the headwinds that we faced in 2024, retail is still in a pretty good place. But we are starting to kind of see the cooling off of some industries and sort of the bounce back of others. And it's going to be really interesting, I think, as we head into Q4 as well as 2025 to kind of see how everything shakes out. So, here, what we're looking at so far is kind of an overview of 2024 so far. So, we're looking at the year over year percent change in visitation by month. And what we can see here is that generally things have been going pretty well for retail from a visitation and foot traffic perspective. A few things to call out here. So, April 2024 and July 2024 are a little bit of outliers right now. And that's because we actually had fewer weekend days this year compared to 2023. So, that skewed the results a little bit. But the other thing that I kind of want to put into context here too is that we are seeing overall growth in visitation, but that doesn't necessarily always mean that we're going to see conversion into sales. And a lot of that we're seeing kind of because of consumer trends in the market right now. For example, when consumers are going to grocery, they're making more frequent trips, but their basket size isn't necessarily growing during each of those trips. So we are seeing a higher frequency in visits that might not actually be converting to sales for the consumer. But kind of two overall, I think, major themes that we're seeing in retail right now. One is that we're seeing a little bit of a slowdown in those essential retail categories. So if we think about grocery, superstores, dollar and discount, we're seeing kind of a slower period overall. And those have been really high flyers over the past few years. So we're seeing a softening of that business from a visitation perspective. And on the flip side, we are starting to see a slow, albeit very slow, growth from some of those more discretionary sides of the business. So we're going to dig into categories like home and consumer electronics and apparel. And certainly we are not out of the woods yet in any of those categories, but we are starting to see a slight uptick. And we're sort of seeing these two sectors of retail kind of eclipse each other right now. And we're definitely going to see that in 2025. The other kind of key theme that we're seeing in the industry right now is this real bifurcation of the consumer as well as the retail industry. So, consumers we know have been incredibly economically challenged over the past few years, but what we're starting to see is that retailers that align with higher levels of household income continue to be pretty strong performers, even as higher level consumers are still looking for value. But what we're also seeing is that consumers with lower household incomes are even more further constrained than they were before. And so retailers that are servicing those groups of consumers have had definitely more challenges throughout 2024. And that's kind of one of the major stories that we've seen emerge. So if we go to the next slide. So this is diving into Q3 in particular. And there's a kind of few interesting key stories here that we're seeing. One is that generally from a visitation perspective, we saw a pretty strong back to school season, which is really exciting. And when you think about kind of that back to school really started with Prime Day that week of July 15th, we saw pretty strong growth throughout most of July, August, and pretty much up until the end of September, which I think is a really good kind of borderline perspective to have as we think about the holiday season from a barometer, we're doing pretty well. And we're definitely attracting consumers to retail and they are making visits, they are stopping into stores. We'll still kind of see over the next few weeks when retailer earnings reports come out how that really drove conversion. If we saw an uptick in sales and uptick in volume from a consumer perspective, but we did see an uptick in visitation, which I think is really exciting. The other kind of factor here from Q3, we can just go back to the last slide really quickly, is that we also saw, and we're going to talk about this a little bit more later, this pull forward demand when we think about the holiday season for Halloween as well as fall seasonal decor. We saw consumers really right after July 4th be really bullish on these categories in particular, and that's something that we've seen with the winter holiday season where consumers are continuing to shift those holidays even earlier, but we're starting to see it with fall seasonal occasions as well, which is also very interesting. So, looking at Q3 from an industry perspective, you can kind of start to see a little bit of what I was talking about with this sort of waning of essential retail and this rebound of discretionary retail, because we can see that from dollar and discount superstores and grocery, their visitation was only up about 2% year over year for the third quarter. And in contrast, we're seeing just slight declines in traffic for apparel and other categories like home, which I think is, again, really encouraging when we think about these discretionary categories that really haven't had a strong performance since 2021 and as we were coming out of the pandemic. So seeing these categories on the rise is, I think, really encouraging. And also calling out fitness on the left hand side. I think this is kind of when we're thinking about consumers in the post pandemic period and finally returning to whatever the new level of normalcy is. Seeing this growth year over year in fitness in particular is interesting because so many people, as we know, went out and bought the Peloton. We're working out from home, and we're finally seeing this return to physical retail when it comes to even fitness performance, which I think is definitely also encouraging when we think about the importance of physical retail to consumers and definitely them being willing to kind of return to normal activities and also embrace the physical retail world again. So, we're going to take a minute to focus on some of the essential categories to really dig into what's going on and talk about kind of that general, I don't want to call it a slowdown, but kind of softening of visitation to essential retail categories. So, once again, we're looking at the year over year comparison in visitation throughout 2024 so far. And what we can see is kind of, in particular, what I think is most jarring on this slide are those pink bars, which represent dollar and discount stores. And if we think about where we were this time last year, we saw a consumer really trade down to various levels. So if you were a grocery store customer, you were trading down into superstores. If you were a superstore customer, you were trading down into dollar and discount. But what we're seeing right now is that as that sort of lower household income bucket becomes even further constrained, even dollar and discount stores are starting to kind of see that revolution with the consumer. And we've had Dollar General come out and Family Dollar say that they've seen definitely tightening of the budget from their consumer households. And they've done a really good job at adding grocery categories and really trying to be a little bit of everything to their consumer base right now. But we're just seeing that lower household income consumers are even further constrained than they were this time last year. Looking at kind of the grocery and superstore side of the business, superstores have generally performed very well this year, and that's partly due to the stellar performance of warehouse clubs. But it's also that some of the mass merchants are seeing the discretionary side of the business do a little bit better than it did last year, as well as really being able to maintain that presence in grocery. And from grocery perspective, we're still seeing value-oriented grocers really drive the bulk of visitation growth. So all the Trader Joe's, banners of that nature. But we're also seeing that specialty grocers are doing very well as well. So if we think about like a central market format versus an HEB, we're seeing that central market growth is actually outperforming that of the HEB chain. So there are pockets of specialty grocery that are also doing very well right now. So on the flip side, looking a little bit more at the discretionary side of the business. So here we are looking at consumer electronics, home improvement and furnishings, as well as apparel, excluding off price, but this does take into account department stores. This chart, it does tell a different story, and I know that I'm being super positive about it. We are not out of the woods yet, so I'm not telling you that we are going to see, double-digit growth in apparel next year. But as you kind of look at the slide, what you can see is that visitation levels are slowly getting better as we progress throughout the year. And I think that this is due to kind of a few factors that are going to bleed into 2025. One is that apparel has done a really good job of innovation, and we are seeing the resurgence in brands that have really kind of focused and honed in on being the best that they can to their customers. So if we think about the kind of reinvigoration of the Gap, the rise of Abercrombie and Fitch, the continued success of chains like Anthropologie and Lululemon to some extent. And also, I think department stores have done a really good job of pivoting in 2024. We are certainly not out of the woods yet, but thinking about the success of Macy's First 50 strategy, as well as kind of department stores figuring out how to shift their business models and really innovate to reach today's consumer, I think we're going to see a lot better performance in 2025 from them as well. And from a consumer electronics and home perspective, the other thing that I think we need to take into account is these are categories that did very well during the pandemic and then basically dropped off overnight. But we're coming up on kind of the 5-year anniversary of the pandemic next quarter. And as we think about that, which is truly kind of mind boggling, but we're going to start to come back to the replacement time for some of those. So if you bought a TV 5 years ago, you might be in that replacement window for a new TV or home office equipment, things of that nature, or making improvements to your home or decorating. So part of this is that we're kind of going to start to eclipse ourselves in this sort of post pandemic world where people are going to start to need to replace these categories. But at the same time, these are also good categories that are barometer of consumer sentiment. And as the consumer starts to feel a little bit better, they might be willing to go out and make some of these larger investments and higher ticket purchases, which also will be a good indicator of what's going on generally in the industry. So, up next, we're going to kind of focus on what is driving some of the performance right now. What are we seeing across the board, and how can we think a little bit better about consumer segmentation as well as what retailers are really innovating with? So, here I talked about bifurcation as kind of one of the overall trends that we're seeing across the industries. And we can see this from a department store perspective pretty clearly. So here we're looking at a rolling 7-day average of year-over-year change in visits, and we're looking at Nordstrom, Bloomingdale's, Saks, and Kohl's. And certainly the bifurcation kind of trend and method is not foolproof. We have some retailers that are always going to be outliers here, like Saks has had a little bit more of a challenged performance compared to Nordstrom and Bloomingdale's throughout this quarter. However, if we look at Nordstrom and Bloomingdale's compared to the performance of Kohl's, we can see that the department stores, particular that still kind of see themselves as more of a luxury department store, tend to be doing a little bit better than a department store that's kind of focused more on value, which is a little bit counterintuitive to what we think about the consumer right now with such an inherent focus on value. But I also think that we're seeing now with consumers, especially in higher income households, that still want some of the other elements of the retail experience. So convenience or in-store experiences or higher levels of service. And so we're seeing that retailers on the high end that are doing very well are leaning into those components for the consumer that are making consumers feel special because even value-oriented high household income families still are focused on deriving as much value out of their purchases, and they want to make sure that they're getting something out of that experience, especially a physical retail experience. So, one of kind of the specialty categories that has been a high flyer throughout the past few years has been beauty. And I think that that's for a few different reasons. I think this coming together of the masstige beauty market with retailers like Ulta really kind of finding the sweet spot in that, where consumers are now kind of curating their beauty assortments from both the mass as well as prestige categories. That certainly benefited the industry overall. We've also seen kind of trends as especially as consumers have been more value oriented in this idea of a small indulgence where you might not have enough disposable income to go buy a new pair of shoes or go buy a new handbag, but you certainly could go out and buy a new lipstick. And this is something that we've certainly seen kind of benefit beauty as well, where consumers are kind of able to go for these small indulgences, and that's really benefited the category. And Ulta has really been leading the charge. They have done an exceptional job in both mass and prestige in their brand assortment and curation, and also the combination of services as well as a retail experience. One of the things that we're seeing in the beauty category right now is that services are still doing pretty well. So if you think about spa types of services, waxing services, laser hair removal, and kind of other treatment services, those are still doing very well. But we are kind of, as you can see on the screen, as we look throughout the end of 23 and into 24, we're starting to see a slowdown in this category as well. And the CEO of Ulta had sort of warned about this cooling off period starting this spring, but we're starting to see it in our data. And we're actually, that's
Yeah.
one of, I think, the coolest things about foot traffic analytics is that we're able to corroborate what executives are saying across the retail industry and really see it happen in our data. But I don't want to necessarily paint this as a doom and gloom, even as kind of Ulta being the pinnacle of the category, because as Ulta's share kind of declines a little bit, the rest of the market becomes more competitive, and we're still seeing very high value retailers like Blue Mercury doing well. We're seeing the more professional side of the business with Sally doing pretty well. So there will be increased competition, but that also drives innovation in the category, which I think is something that kind of as beauty moves through the life cycle curve of specialty retail is going to be very important for its future. So the other kind of category that I wanted to call out today, because this is completely a slide that I never thought I'd be talking about, but I think it's so cool. And as a physical retail nerd, if you will, I think this is such an inspiring story to see that I had to share it. So we're looking at the change in monthly visits for 2024, but we're looking at the book category. And as you can see from Barnes& and Noble, look at those numbers in traffic visitation year over year. I mean, staggering numbers. And as I was putting this together, I was trying to think about what could be driving this. And I think that there's a few different behaviors that we're seeing with the consumer that are really encouraging. And I think as we think about other categories, this could be one to kind of watch to inform us of what's going to happen elsewhere. If we think about e-commerce disruption, books, I mean, that was Amazon's core business model when it started, was disrupting the book market. And I think that what we're seeing is a lot of industries right now are hitting that sort of maturation point of how many more sales and consumer demand is going to be shifted online. Obviously, we've had the rise in ebooks and things of that nature, but we're starting to see that as industries hit that sort of like saturation, that we're starting to see physical retail become more important in some of these kind of larger categories. The other thing that I think we're seeing is that for a bookstore like Barnes and Noble, the experiential element of retail is still very important. So people wanting to go in and browse, people wanting to go to the cafe or meet up with people or work from a Barnes and Noble, that's really benefited them. And we're also seeing kind of the rise in things like book talk and virtual book clubs and people getting together and socializing because of books. And so books have really become a strong form of entertainment throughout 2024, which certainly has also benefited the retail experience as well. But I think this is one that it just goes to show you that even at a time where digital commerce is so important to our industry, physical retail is here to stay. And we are kind of starting to see our consumer tell us that even more. So, kind of focusing a little bit elsewhere in the industry, I wanted to talk about what's going on that's driving different retail innovations. And store formats have been something that we've been talking about probably for the last 5 years. If you think about when Target was really the pioneer in opening small format stores on college campuses in major cities, everybody was going small. And then we saw over kind of in post pandemic, as people moved and migrated to more rural and suburban locations, everybody went big. And I think what we're seeing right now in the retail industry is that retailers are kind of finally realizing that it's not just about opening the store that's trendy or opening more stores, but it's about opening the right stores for your consumers and your markets. And that's really one of the powers of Placer's data as well, is that we can really pinpoint the types of consumers that are in a local zip code and what the local retail competition looks like, and really help retailers be more strategic in their site selection and also what types of formats they should be putting in. So if you look on the left hand side, so this is looking at Sprouts grocery store, and we're comparing these small format locations to kind of the overall chain wide, and you can see that these small format locations are their growth year over year in visitation is basically outperforming Sprouts every single month from a chain perspective. So we're seeing that small format in grocery is working really well. And it's probably working really well because for consumers who are busy on the go, just want to get in and out and want a more curated and focused assortment, small format in grocery does that very well. And on the flip side, if we're looking at the Walmart example on the right, this is looking at large format neighborhood markets for Walmart. And that's comparing the kind of large format store to the nationwide chain level again. And you can see that that large format store in particular in Atlanta is doing very well. And certainly the neighborhood market is a different concept for Walmart, but they're seeing that just like their super centers tend to do better, they're seeing actually larger formats in the neighborhood concept are also doing very well for them. So we're kind of again on the store formats, but this is looking at it from a Macy's perspective. And I think another way that we can think about formats is reaching the right types of consumers. So here what we're doing is we're looking at different kind of psychographic and demographic segments using spatial AI's persona live data. And we're able to look at this by kind of store format as well. So we can look at for each of these segments, what is their affinity for either Macy's, Bloomingdale's, Macy's small format, or kind of a nationwide baseline. And so it's kind of no surprise, but sometimes you want to know if your hypotheses are going to be correct. If we look at ultra wealthy families, clearly they're over indexing in Bloomingdale's. That makes total sense based on their strategy. But what we're also seeing is that kind of more urban families, so those near urban diverse families, as well as city hopefuls, they over index in Macy's small format, which again makes sense based on the high concentration of retail in those areas and also potentially like a smaller, more curated assortment. And when we think about kind of more suburban consumers, they like both the regular Macy's, kind of your tentpole mall anchor, as well as the small format. And what's interesting too is if we look at those young urban singles, these younger consumers who you would not think would have a higher affinity for a more traditional Macy's, we're seeing a higher affinity there. So I think that this is really interesting in breaking down, even for retailers that have different formats. What types of consumers are they reaching? What is the most how can they think about different consumer groups differently and make sure that they're planning those stores according to what types of consumers are in a specific area? So we're going to close off today thinking about kind of what's going on as we approach the holiday season, as well as what we are thinking about for 2025 and specifically also around holiday 2024. So, what we're looking at here, and I kind of alluded to this before, is that we're seeing this sort of start of the fall season and Halloween even earlier this year. So what we're looking at here on the screen is craft retailers. So this craft and I guess seasonal, what we could say. So we're looking at a combination of Michael's, Joanne, World Market, and Home Goods. And you can see starting in July, basically, the strong year-over-year change in visitation that we're seeing there. And certainly there might be some back to college baked into here, but we're also seeing that basically on TikTok and on social media, everybody started decorating for the fall season on July 5th. And this is a trend that we've observed over the past few years that we're seeing people shift their spending habits earlier and earlier, but we're able to see it in the data, which is really interesting. And as we think about the holiday season for winter holidays in 2024, I expect that we're going to see the same thing that November 1st, we're going to get a whole bunch of people starting to put up their Christmas trees and get ready for that seasonal period as well. But I think it also kind of echoes what I said before about this idea of as consumers are facing economic headwinds and challenges, there's a lot going on in Q4 this year that some people are just looking for things that spark joy for them. And seasonal decor is kind of it's not that expensive. It's something that consumers can really put a lot of creativity and their personalities into, and it's something that makes them feel good. And that is truly what we do as a retail industry, but it's also what we're serving for consumers who are a little bit more constrained right now, that we want to provide them with opportunities to find joy wherever they can, even if they're more value oriented than they were a few years ago. So the last slide that we have today is looking at sort of holiday peaks that we've seen throughout 2024. So this is comparing sort of growth in visitation compared to the same days that we saw in 2023 by category. So we saw that we've seen a pretty kind of nice uptick in visitation around these holidays in general. So as we think about this in relation to the holiday 2024 season, I think we can expect that we're going to see a pretty healthy rise in traffic. Again, how that converts into sales and volumes for retailers remains to be seen. But I do think that around tentpole events like Black Friday, Super Saturday, Cyber Week, as well as some of kind of the other events that we see throughout the November and December period, we are likely to see a healthy increase in traffic, particularly when we think about areas like department stores, which you see Memorial Day, crazy traffic growth that we see there. And especially as consumers are more value oriented, I think around the big days when they can expect the best pricing and promotions and value, consumers are going to show up. And so that's really how I'm thinking about the holiday season this year is that we know consumers are going to show up. And I think we as an industry need to make sure that we are doing everything in our power to have the right staffing, having the right assortments, and having the right kind of promotional strategy to convert this consumers who we know are going to be coming in. So with
Thank
that,
you,
I will take any
Elizabeth.
question. Yeah, of
Thank
course.
you, Elizabeth. Well, first of all, I have to tell you, you're getting all kinds of positive comments in the Q&A. So thank you for that. And for our audience, just a reminder, if you have questions, please continue to put them in the Q&A function. So Elizabeth, I have our first question for you, which is footfall was definitely earlier and back to school based on what was seen in the slides. What about holiday? And do you think that October is a good indicator of what the rest of holiday is going to look like?
Yes, I think that is a great kind of question. And it's funny because we're sort of the holiday season is a tale of two different consumers right now because we've seen this elongation of the holiday season probably for about the past 5 years at least, if not longer. But I do think some consumers, there's like a group that wants the holiday season to begin in October, and there's another group that finds it to be a little bit too long. So we're
Yeah.
battling against both of those, but I do think that October will be a really good barometer, especially because we just wrapped up Prime Week last week and many of the other retailer deal days. I think when we can start to kind of measure visitation against those same events in 2023, that'll give us a good indication because there are people that are going to shop early and shop often. And then there are going to be the people that consistently are waiting until the last week before Christmas to do their shopping. So we know that those two consumers are always going to exist, but I think generally we'll see if there's an uptick in the October events, what will that really mean for Black Friday and other events later on in the season?
Great, thank you. The next question goes back to one of your slides, I believe, about young urban singles.
Mhm.
And the question is, it's interesting to see that these young urban singles are shopping cross segments, high value, value to high end. Can you talk a little bit about that?
Yes, that is a great question. And I think that what we're seeing in millennials and Gen Z in particular is that as they are coming into more disposable income, I think they certainly are willing to spend it, but they also still have this sort of value orientation of what's going on right now. And I think that we're also seeing with younger consumers that they're able to kind of curate their retail kind of selection and environment from a combo of high to low. So there are certain categories that they want the best quality, the best products, the name brands. We know, especially when with the rise of social media, that conspicuous consumption is something that we're really seeing across the US, especially with younger consumers. So there are elements of kind of the high that they always want, but they also are not they also love Trader Joe's and they love Aldi and they're not willing to shy away from private labels. They're more open to those types of things. So I think younger consumers just want retail to work for them. And so that's really about them curating their own retail experience across a variety of different price points.
Amazing. Thank you for that. I don't know if you can answer this next question, but I'm going to lob it over to you anyway. Excellent job recapping Q3 and telling us about holiday. But this question wants to know, this listener wants to know, what do you expect for 2025? What is the outlook for next year?
That is an amazing question. And if I had a crystal ball, I'd probably not be on this webinar. But what I can tell you is that I think we're going to see a continuation of what we've seen in 2024 in a lot of ways, but it might be more pronounced. I think the rebound of discretionary categories, I think that is definitely going to start a little bit more in 2025. I think we're going to see consumers shift back to discretionary spending a little bit more. And I think that we're going to see a leveling off when it comes to the essential retail categories. I don't think we're going to see that much more growth in visitation from grocery and potentially dollar and discount. I think that those are going to be more about fighting for market share than growing incremental visits over time. But I think really my hope is that 2025 is all about the rebound of discretionary retail because I think it's something that all of us are really rooting for. And so many retailers have kind of put in the work over the past few years during these challenging times to reinvigorate their brands, really become customer centric. And I want to see that pay off for everybody next year.
Great. Thank you. I have another question that just came in, which is, has retail implementation of technology or experience? What has been the most effective that you've seen?
That is a fantastic question. I think both are very relevant in different ways. I think technology has really helped with kind of the blending of the e-commerce and physical channel. And when we think about things like delivery and curbside pickup and all of the things that can be powered that way. And I think that we now are at a place with both channels that the consumer really does see blended retail. And that's not something that we could say a few years ago, that for the consumer, they can shop multiple channels and get the same experience and really feel like they're connected to the brand for the first time. I think from an experience perspective, we still have a ways to go with physical retail. I think that for certainly for higher value retailers and things of that nature where service components are baked in, that's been easier. But I think that we've seen a lot of challenges in the physical experience of retailers over the past few years. There's been a lot of consumer pain points. And I think that's really where we need to start to invest again, is making sure that when a consumer walks in the door, that that experience is positive and that they are wanting to come back.
Great, thank you. And I have one last question, and this is again, I guess everyone's interested in next year. They've already put holiday behind them,
Yes, I
but
know everybody's already baked.
so the question here is, with artificial intelligence, and obviously you all, Placer AI has been using AI for many, many years, but for the rest of retail, it's relatively new. But what technology do you think retailers and brands can expect in 2025?
That is a really good question. I think one of the things that it's a few different ideas, I think. AI is certainly, I think, still a huge buzzword across the industry. And so many have done it from a consumer perspective of chatbots and customer service and things of that nature. I think where we're going to see AI a little bit more is in things like data and analytics, where I think that's going to become even more important. We know first party data and things like retail media are still on the rise. And I think all of that together is going to continue to be kind of like a technological focus for the retailers. And I had one more that I just lost in my head, but I think it's also just investing in kind of like in-store retail media technology as well. I think that's really where we're headed
Oh,
next. I think we've done a really good job from the digital channel, but that's something that I think retailers are really focused on right now. And I think technologies that can power retail media networks in store for consumers, I think that's going to be a huge investment in 2025.
yeah, I agree with you. That is so big. Elizabeth, can I get one more question in there? I think we have
Yes,
time. Do you
yes,
mind?
we
Okay,
can.
great. Another question just came in, and I want to make sure our listeners, all their questions are getting answered. So this one is, do you think that consumer retail fatigue from pulling holiday forward with Prime Day in October and Circle Week, do you believe this is a real phenomena? And what are your thoughts on that?
That I do think it's a real phenomenon, and kind of as I alluded to before, I think we have different camps of consumers that we have to think about. I think we have consumers who, again, want the holiday season to be as long as possible, but I do think for your average consumer, the holiday period is getting very long and pushing it into the first or second week in October. At some point, we're going to see that shift sale. We're not going to see more incremental volume done in retail just because we're making the holiday longer. We haven't really seen that over the past few years. We're seeing, 1 to 2% growth as a total industry during the holiday period. So I think we have to think about, are we elongating the holiday to actually make it better? Or should we put more focus into some of those temple events? Because we do know that from a visitation perspective, Black Friday is still it's the highest traffic day during the holiday season. So is it worth pulling all of this kind of investment and time and energy into October? Or is it better to continue to focus on the events that you're driving eyeballs, driving traffic to?
Great. Thank you so much. And I just want to say one quick thing. So, in the webinar, you said something I thought was really relevant in terms of Placer AI, and that is Placer AI is small and mighty. And I really believe that it's not just about reporting. Reporting is easy for you all.
Hmm.
Y'all reporting, but you also do a lot of forecasting. You can help with future locations, markets, demographic information. You can actually help retailers pinpoint specific markets, thereby making them more strategic in their location development strategies. So I
Yes.
think that's real important for our listeners to understand. But
Yes.
thank you so much for being
Of
here, and
course.
love having you as always. And thank you for our listeners. You can find more of our great information on therobinreport.com. And maybe, Elizabeth, can you just tell our listeners where they can find the anchor, which is, you
Yes.
referred to it earlier. It's a report that comes out from Placer AI. It comes out on Fridays. Where can they find that?
Yeah, so if you go to placer.ai in our library, you'll be able to sign up for the anchor. We also have a repository of every article that we've written in the past. So you can search by topic if there's a brand or retail you're interested in. And also for anybody who might be in Chicago this week for Shop Talk, we have a large booth there. I will be there as well as our head of analytical research, RJ Hodavi. So please stop by, say hi. We'd love to connect with you and talk more about what's going on in retail.
Great. Thank you so much.
Of course, thank you.